Okay, this is part 3 of problem 4-1A. Okay, we just finished preparing our financial statements, and now continuing with the accounting cycle, we're going to prepare our closing entries and then our post-closing trial balance. What I want to do is unhide the columns that I originally hid over here. Oops. All right, let's see if we can try this again. Unhide. Okay, so here's the rest of my worksheet. Right, I have my trial balance, my adjustments, columns for my adjustments. We prepared our adjusted trial balance. We prepared our financial statements from that. And now I have columns for the closing entries and then the post-closing trial balance. All right, what I want to do, though, to fit everything on the screen, we don't really need the trial balance or the adjustment columns anymore, so I'm just going to hide those. All right, this is not working out. Let me see. Come on. And we'll hide those. Okay. All right, so let's prepare our closing entries. The first closing entry will be our revenue account. I have a credit of $14,150. In order to close that out, I need to debit it. So I'm going to debit my service revenue, and then I'm going to credit an account that was introduced in Chapter 4, and that's the income summary account. The income summary account is exactly that. It's summarizing your income. You're just going, and income is defined as revenue minus expenses. All right, so let me post that into my worksheet. And so a debit of $14,150 to the service revenue line. And then I'm going to come down and I have my income summary down here. And I'm going to credit $14,150. Okay, great. And if we look, my debits, if I look at my totals in my spreadsheet, my debits equal my credits, so I'm good. All right, the second closing entry is to close out the expense accounts. That's these accounts right here, right? Every account that has the title, that has the term expense in the title. If we did have an account up here called prepaid expense, that is not an expense, that's an asset. If you see the word prepaid, it's an asset. So you're not going to close that out. That's a permanent account. Assets and liabilities and your capital account are permanent accounts. They're always there. All right, so my nominal temporary accounts, we just closed out the revenue. Now I want to close out all these expense accounts. All right, my expense accounts normally typically have a debit balance. These do. They have a debit balance. If we go up, they're in the debit column. All right. So in order to zero these out, I need to credit them. Then let's go over here and create our journal entry, our closing entry. Sorry, our closing entry. I'm going to credit these expense accounts. And then the account I'll debit will be the income summary account. And I'm going to debit it for the amount of my total expenses. So if I total this up, I get $7,470. And so let's put that in there, 7,470. And I'm in balance, right? This closing entry now is in balance. My debits equal my credits. And I'm effectively dumping both my revenue and my expense accounts into the income summary account. So let me post that. All right, first I have a debit to the income summary account of 7,470. And then I'll have a credit to all these expense accounts right here. And what I'm going to do, instead of copying it over, I'm just going to link it. So if I use the equal sign and then I arrow over to the number I want to carry into the cell, and then I can just hit enter. Now I can just sort of copy that formula down. Okay. So there's all my credits for these expense accounts. And if I look on my spreadsheet, my debits will total debits equal my total credits. So you can see that this is sort of helping us create our closing entries. I have a number here that I'm going to delete. I just noticed. This is, I had that there as a calculation, and I'll show you later. how we'll come up with that. Okay, so we closed out our revenue. We closed out our expenses. Now the third entry is to close out the income summary account. I need to know what my balance is in the income summary account. So I have a debit so far of $7,470 and have a credit of $14,150. Let me see what that equals. Right, so I'll just take the $14,150 minus the $7,470. And so I get an amount, I don't know if you guys can see that, of $6,680. And if you think about this, that should be my income, my net income on my income statement. So let's just go over and look at that. And sure enough, there's my net income of $6,680. And that's what's in my income summary. So I need to close that out. That has a credit balance. So I'll have to debit that, the income summary account by $6,680. And then what I'm going to credit is the capital account. Just like in the owner's equity statement, right? We took our net income and added it to our capital. All right, so we're basically doing the same thing with these closing entries. All right, so let me prepare that entry. Okay, so income summary is debited and capital account is credited, and we'll put that into our spreadsheet. Income summary by 6,680, and then the corresponding credit to the capital account of 6,680. And you know what? Let me move over so you guys can see the title, the row titling. All right, so that's our third entry. The final entry is to close out the drawing account, right? The drawing account has a debit of 600. That means I need to credit it. Sorry, I've been talking too much. All right, so I need to credit the drawing account, and the corresponding debit will be to the capital account. All right, so my debit is to my capital account, and the credit is to the drawing account to zero that out. And so we have our final closing entry, and then I'll post that. So I have 600 here in this row, and then I have a 600 debit in my capital, which will effectively reduce the capital. All right, so now I have all my amounts in here in my spreadsheet. Oh, and let's look at the total, right? And we're in balance, right? We have debits equal to credits. 28,900, 28,900. Now let's create our post-closing trial balance, and that's going to prove to us that we properly closed all our temporary accounts, and what we should have left over is just the permanent accounts, and that's the assets and the liabilities. What I'm going to do is just take these amounts, because you can see there's no closing entries to these amounts that are not highlighted, and those are my assets and my liabilities. So I'm just going to copy them, and I'm just going to paste them right in here. There's no closing entry that's going to affect these balances. All right, so there's my debits, there's my credits for the assets, the liabilities. Now I want to come down and look at my drawing account. I have a debit of 600, I have a credit of 600, so that's zero. I'm going to carry zero over, right? Zero debits, zero credits. They net. Right, my corresponding debit of 600 zeroes out my corresponding credit, right? They zero each other out. Let's look at the capital account. Now I have a credit of 20,000. I have a debit of 600, and then I have a credit of 6,680. Right, so let's, the capital account should normally have a credit balance, so let's go into that credit column. Let me do my formula. I'll take my credits and add them together, the 20,000 and the 6,680. I'll add those two together, and then I'll subtract the drawing of 600. And so I get a balance in my capital account of a credit of 26,080. And hold on a second, that's exactly what our owner's equity statement has as our ending capital. Right, 26,080. So you can see that the closing entries effectively are what we're doing here with our owner's equity statement. Right, we have our beginning capital, then we add the net income, we subtract out the drawings, and then we have our ending capital. All right, let's just finish off. I just want to show you quickly, you know, everything else, service revenue. So if you carry these over, these are all going to be zero. Oops, not there. All right, so that's all zero. And I could just copy that down. But one thing I do want to show you, right, our credits here will be zero also, but I'm running out of time. But what I want to show you is, let's look at the income summary. If I total this up, it should come out to zero, right? I have debits. My debits come out to 14,150, and I have the corresponding credit of 14,150. So that, in addition, will be zero. And our post-closing trial balance is in balance. And we have debits of 49,730 and credits of 49,730.